Double entry bookkeeping. In this video tutorial, we are going to work through the question called Patrick. You should have a copy of the question in front of you. Copies of the question are available to download on the website. Also remember, you can pause and rewind the video at any time. We shall now start the question. So starting up here on the top left hand side of the page, we'll read through what we're asked to do. So Patrick has started business on the 1st of March. The following is a list of transactions for the month of March. So here we have the list of transactions. You are required to write up the above transactions in the books of Patrick for the month of March, balance off the accounts, and prepare a trial balance. So in part A, what we're going to do is we're going to enter all these transactions into Patrick's books. In other words, we're going to enter them into the ledger accounts, and then in part B, we'll balance off the accounts and prepare a trial balance. So, starting off with March the 1st. Every transaction has an impact on two ledger accounts. On one ledger account, there will be a debit entry, and on the other ledger account, there will be a credit entry. So here we can see, first transaction, March the 1st, started business by lodging 100,000 into the business bank account. So the two accounts here will be, well, Patrick introducing money in, it'll be capital, and it's going into the business bank account, so the other account will be bank. So our two ledger accounts will be bank and capital. Money going into the bank, we'll put it on the debit side, so we'll enter in here the date, description, and the amount, and then the double entry of this has to be on the credit side of the other account, and the other account is the capital account. So we'll put in on the credit side of the capital account the date, description, and the amount, 100,000. March the 2nd, bought premises for 70,000, paying by cheque. Paying by cheque implies the money came out of the bank. We already have a bank account, but we now need to open up a premises account. So bank account, if you look at your bank account, you can see there's a transaction already on it, and we'll open up a premises account. The money's coming out of the bank, so we will credit the bank. March the 2nd, premises 70,000, and the double entry will be, we will debit the premises. March the 2nd, bank 70,000. March the 3rd, purchase goods costing 12,000 on credit from Adrian. Purchase goods is a purchases account. On credit means no money changed hands, so we need an account for Adrian. Adrian will be a creditor. So the two accounts we need are purchase account and Adrian account. Purchase accounts are always debited, so we put in here March the 3rd, Adrian 12,000, and in fact Adrian will be a creditor, so we'll be crediting Adrian's account March the 3rd, purchases 12,000. March the 4th, bought a new delivery van from MV Motors on credit. So no money changed hands. So we need a delivery van account and an MV Motors account. So we open up those two accounts there. Now, delivery van is an asset, so we'll be entering that on the debit side. March the 4th, MV Motors, 20,000. And then we will double enter that on the credit side of MV Motors account. We put in March the 4th, delivery van, 20,000. So MV Motors are creditors. March the 5th, purchase goods costing 3,000, paying by cheque. Now purchase goods is a purchase account. Paying by cheque means the money came out of the bank. So what we need here is we need the bank account and we need the purchase account. Now if you look up over your previous ledger account, you see that you have a bank account and you have a purchase account. The bank account has two transactions already on it, one debit and one credit, and the purchase account has a transaction on it from March the 3rd. Now we're going to pay by cheque, so money coming out of the bank, we'll credit the bank, so we put in here March the 5th, purchases 3,000, and in the purchase account we'll put in here on the debit side March the 5th, bank 3,000. March the 10th, sold goods for 6,000, cash. So we need a sales account and we need a cash account. So we don't have either of those, so we'll open up a cash account and a sales account. Money coming in, we will debit it. So we debit the cash account. March the 10th, sales 6,000. And we will be crediting the sales account. March the 10th, cash 6,000. March the 15th, purchased more goods from Adrian on credit costing 10,000. So purchasing goods, that's our purchase account. On credit, no money changed hand, so we have Adrian. Now we have both those accounts. If you look up, you see you have a purchase account with 2 transactions on it, and you have an Adrian account with a transaction from March the 3rd. So we're now going to fill in here, March the 15th, Adrian 10,000, and the double entry will be down here, March the 15th, purchases 10,000. March the 20th, sold €8,000 worth of goods on credit to Bill. So we have a sales account, but we're selling them to Bill on credit. We don't have an account for Bill. So we'll open up a Bill account, and if you look back up at your previous ledger accounts, you'll see you have a sales account already with a transaction from the 10th of March on it. So, putting this information in, we're going to debit Bill, March the 20th, sales 8,000, and we're going to credit the sales. If you weren't too sure what to do with Bill's account, well, you'd know that when you sell goods, you always credit the sales account, so you must be debiting the other account. March the 26th, received a check from Bill, so Bill sent the check, and check implies the money went through the bank. So if we look at our bank account, we already have that with 3 transactions on it, and we have a Bill account which is a transaction from March the 20th. So money is going into the bank, so that'll go in on the debit side. March the 26th, Bill 5,500, so therefore the double entry will be to credit Bill's account, March the 26th, bank 5,500. And March the 27th, paid office expenses by check. Well, check implies bank, so we have a bank account. We don't have an office expenses account, so we would need to open one. Now we're paying money out, so money coming out of the bank will be on the credit side. March the 27th, office expenses 250, so we will double enter that into the debit side of the office expenses account. March the 28th, posted a check for 4,000 to MV Motors, so check implies bank, and we already have an MV Motors account. So if we look at these, we see we have a bank account with 5 transactions on it, and you have an MV Motors account with 1 transaction on it. Now money's coming out of the bank, so we will credit the bank, March the 28th, MV Motors 4,000, and we will debit MV Motors account, March the 28th, bank 4,000. And then finally sent a check to Adrian. So again, check implies bank, and we have an account for Adrian. So we have both of these ledger accounts. So we're sending money out to Adrian, writing a check to Adrian, so we're going to credit the bank again. So if we put that in there, March the 28th, Adrian 8,000. So we will be debiting Adrian's account, March the 29th, bank 8,000. We have now recorded all of the transactions for the month of March in Patrick's ledger accounts. So we need to balance the accounts. So we will now go through the process of balancing each one of the accounts we've created. So if I go back up to the very top, the first account that I have is capital. The capital has 1 transaction on it on the credit side, but I need to balance it off anyway. So what I'm going to do is I'm going to write in here in my column totals the total 100,000. Total here is 100,000. Total here though isn't 100,000, so what I'm going to put in here is a figure that will make it add up to 100,000. This is referred to as the balancing figure. So I put in balancing figure there of 100,000, and then I'll bring that down onto the other side, the credit side. April the 1st, balance brought down 100,000. So now we can see in the capital account the balance is 100,000 on the credit side. Second account we have here is the bank account. Now there's quite a few transactions on the bank. We want to identify the bigger side. So if I check that, that's 105,500, and this would be 77 or thereabouts. So the debit side is the bigger side. So I'll write in here in this column total here, 105,500, and I'll write the same figure in here. Now this side here doesn't add up to 105,500, so I'm going to put in here the figure that makes it add up to 105,500. This is the balancing figure. So March the 31st balance 20,250, and then I'll bring this down to the other side, so I have the 1st of April balance brought down 20,250. Next account I have is the premises. Now there's only one transaction in this, so it gets quite easy. We just put in the column totals, and we'll put over here the balancing figure, which is 70,000. And then the 70,000 gets brought down onto the other side. So April the 1st, the balance brought down 70,000 on the debit side. We now have the purchases account. Now there are 3 transactions on the purchases account. They're all on the debit side. So I need to balance this off. And the total on the debit side comes to 25,000. So I'll put that in on the credit side, and I will put the balancing figure in this side here. So March the 31st balance carried down 25,000. And then over here, April the 1st, balance brought down 25,000. So the balance on the purchase account is 25,000 on the debit side. Adrian's account. Now Adrian is a creditor. We purchase goods from Adrian. We purchase goods on the 3rd and we purchase goods on the 15th. So we owed Adrian a total of 22,000, but we paid him 8. So we still owe money. So I'm going to put in here the total from the bigger side, which is these two here, 22,000. And then I'm going to put in here the difference. And the difference here will be 14,000. And the balance then is brought down onto the far side. April the 1st balance brought down 14,000. Now it's on the credit side. Adrian is the creditor, and this means that Adrian is still owed 14,000. Next account I'd have is MV Motors. Now MV Motors are also creditors. We owed 20,000 from the 4th of March, and on the 28th of March 4,000 was paid. The biggest side is the credit side, so therefore we put 20,000 in here and 20,000 in here. Just pop those figures in, and then we get the balancing figure for here, which will be 16,000. So March the 31st balance carried down 16,000, and then this figure will be brought down to the other side. April the 1st balance brought down 16,000. Delivery van. Well, the delivery van is an asset. There's only one transaction on it, so I'm going to put 20,000 in here, 20,000 in here, and then put the balancing figure 20,000 on the credit side. 20,000 balancing figure 20,000, and I'll bring this down onto the debit side. Cash account, likewise only one transaction, so put 6,000 in here and 6,000 in here. Get the balancing figure, which will be 6,000. Pop it in there and bring it down onto the debit side. So the balance on the cash account will be 6,000 debit on the 1st of April. Sales account. Well, sales are always on the credit side, and there's no transaction on the debit side, so I'm going to put in the total here and here, which is 14,000. And then I'll get the balancing figure in here, which of course will be 14,000. And we'll bring this down onto the credit side. April the 1st, balance brought down 14,000. Bills account. Now, Bill is a debtor. Originally the balance was on the debit side, but then Bill paid us 5,500. The debit side is still the bigger side, so we'll put in 8,000 here, 8,000 here, and we get the balancing figure. So I put in those two 8,000s, and then the balancing figure is 2,500, which will bring that down onto the debit side. April the 1st, balance brought down 2,500. So the debit balance, Bill is a debtor, and he still owes 2,500. And then the office expenses, again only the one transaction on this account, so we put the total in here, and we get the balancing figure, which is the 250, pop it in there, and bring the balance down onto the debit side. So we're now going to extract the trial balance. The trial balance is usually set up in what is referred to as journal paper. Journal paper will have space over here for narrative or information, and it'll have two columns here, a debit and a credit column. Now what I'm going to do is I'm going to go back to my very first account, and I'm going to extract the balance from it. In this example here, my first account was the capital account, so I need to go back to my capital account and have a look at it. And if I look at my capital account, I can see the balance is 100,000 and it's on the credit side. So what I'm going to do is I'm going to write that in on the credit side here, 100,000. The next account I have is the bank. So if I go look at my bank account, I can see that for my bank account, the balance is on the debit side and it's 20,250. So I'll go back to my trial balance, and bank, I'm going to write it in on the debit side, 20,250. And I'll go down through each one of the accounts in order and write them in here. And I'll put in the appropriate debit or credit as case may be. Doesn't really matter too much what order you have them in, I'm just taking the order that I opened these accounts. So the next account I have is premises. Premises, they're assets, so the balance will be on the debit side. And on the premises account, if you look back on it, the balance will be 70,000. The next one I have is purchases. Purchases are always debit. I have a figure of 25,000. So you can now just go back and put your balances in and check them against what I have here. Adrian, now Adrian's a creditor. So remember, this balance will have to be on the credit side. So put that over there, 14,000. And likewise, MV Motors are creditors. So put that on the credit side. The delivery van is an asset, so it will be on the debit side. Pop that in there. Cash is an asset on the debit side. Sales are always on the credit side, 14,000 over here. Bill is a debtor, so the balance will be on the debit side. Bill still owes 2,500. And office expenses, they are expenses. Expenses are always on the debit side, so they will be there. Now, that is all of the ledger accounts, and they're all listed there. So I'm going to add them all up, and when I've added them all up, the total I get on the debit side must equal the total on the credit side. So in this case, the total on the debit side is 144,000, and the total on the credit side is 144,000. Okay, that completes our video tutorial regarding the question, Patrick. Thank you.